That's what it is, Martin. It's an 80s. That's what it is. 80s. Positive vibes. Hello, Queen. Hello, Danielle. Guys, 412 million in revenue, up 140% year over year, guys. Positive, entertain. Let's go, guys. Don't you guys take a second, smash that like. Before we go started here, take a second, smash that like, share the link, guys. Get some more Clove lovers in here. I know there are a lot of you guys, so smash that like, hit that subscribe, share the link, guys. Again, the conference call starts in 14 minutes here, guys. 14 minutes. 14 minutes. Conference call starts. What's up, Neo? As he's getting ready there. Neo, what's up? What's up? What's up? What's up? There you go. There you go. So conference call, guys. 14 minutes here. So we have some time here to go over this article here a little bit. So again, Clover Health. Total revenue of 114 million, up 140% year over year. Lives on the Clover management nearly doubled from the first quarter of approximately 129,000. Clover Assistant on track to manage over 1 billion of annualized revenue. Wow, there's some quotes in here that I want to get to as well. But again, these guys are going to go over everything in the conference call again, right? Everything. So yeah, again, let me know if you have any questions. Why is Clov going back down? Because excitement, and then we flush, right? So Clov is still sitting just below $9 for now. So hopefully, the conference call is something that helps us. Helps us. Just the numbers at the top. What do you think?
I think that's very impressive.
Yeah.
I think it's very impressive.
Yeah, there you go.
What do you think, Blaze?
I like him. I like the numbers, guys. Again, 1 second here, guys. So yeah, conference call starts in a bit here. So I'm gonna put up this thing here, this banner here, so we don't keep getting those questions, guys. So post market, Martin. Yeah. Oh, 1 second. Yeah, I'm gonna go over this article, guys. So just give me a second here. I just want to make sure everybody is having some people can join us before we go over everything here, so we don't get the same questions over and over, right? So most of you guys know everything that's going on already. Again, these guys are having a nice little post market here because of the revenue. Again, the earnings were pretty good, right? So again, like Gary was saying yesterday, guys, if you don't beat earnings this year, and then you suck, right? Well, that's what Gary's saying. So because these earnings have been compared to when most things were shut down, right? But again, this is a medical company, so it's a little bit different. So projected price, Joseph, there is no projected price, right, Joseph? We can't tell you. Again, Joseph is asking here, guys, what is tomorrow's projected price? We don't know. Right?
Yeah.
We don't know. Yeah, go ahead, Neil. Go ahead.
I would be happy with $9 where it's at now.
Yeah, exactly. So just to start, right, again, I know a lot of people are holding Clov for a potential squeeze because it's heavily shorted, right? This thing is shorted more than AMC itself. So again, a lot of people are holding because of a potential squeeze. So anything that can jumpstart the momentum here. And guys, let's try not to get too excited here because AMC had the same reaction here and then gave away all the gains, right? So we're gonna take this slow, guys. Take this slow. So 1 second, I'm just sharing out the link here, guys. Give me NV. Just making sure we're good to go. Price 950, Martin, 950 Finvest. Yeah, I know the price targets from like 950 to 10, and just yeah, Peter, $6 tomorrow. No, I don't think we'll see $6 tomorrow, guys. Again, this is a good start. So conference call starts in like 11 minutes here. So it's ready to go. So let me see here. Yeah, you guys can hear the elevator music, right? That's because they're just they're just going here, guys. So let me continue reading this article again. We talked about the revenue. We talked about Clover Assistant, right? If you're not sure what Clover Assistant is, this is the technology, right? That's their proprietary technology that manages everything. So, Clover Health Technology, a next generation healthcare company focused on improving health outcomes for American seniors. Today reported financial results for the second quarter of 2021. Management will host a conference call at 5 p.m. Eastern to discuss its operating results and other business insights. Clover Health health. So this quote here is from, if I can find it here, Vivek. So Clover took another step in its journey to improve every life with the launch of direct contracting this past quarter. This milestone more than doubled our revenue and doubled lives under Clover Assistant Management, and said Clover's Health CEO Vivek, right? So the CEO here. So we have ambitious goals to maintain our aggressive growth trajectory while pursuing our mission to improve every life by making great healthcare available and affordable to all American seniors, regardless of health, wealth, and economic status. Right. So we are proud of what we have already achieved and look forward to continued progress. To the second half of the year. Very cool, guys. Again, what do you guys think of it? Think of this paragraph here. What are you guys thinking? Is this? Are you guys? Is it good or bad, guys? The earnings results here, good or bad? Good or bad? I want to get you
Good.
guys interacting. You guys are quiet and just waiting for that conference call. I want to get some interaction here, guys. Good or bad?
Yeah, managing over $1 billion in annualized revenue, Blaze. That's
Yep.
a lot of money, Blaze,
Yeah, it is.
for senior care
Yep.
specifically.
Yep.
That's not
Yep.
everybody. That's just
Yep.
seniors, guys.
Yep. There you go,
That's
guys. What do you guys?
humongous. That's a huge
Yeah.
amount of money. $1 billion. That's
Yeah.
$1 billion. You know what I'm saying? $1 billion. Yes, that's a huge amount of money.
It sounds groovy.
Managing,
What do you
yeah,
guys think? Wow. People are just
yeah,
quiet, Neil. People are quiet, quiet, quiet. What are you guys thinking, guys? Give me some
yeah.
interaction here. Or maybe I'm just frozen. You're short. Christian says I'm shorting, and you're shorting Christian. That's completely fine. It's completely up to you. Yeah. There you go. There you go, Ryan.
Great stuff.
Your Shook was the 22 spike in caused by earnings? No, it wasn't, Steve. The 22 spike was the 22-28 spike was just because of the short squeeze. Combined with AMC, GME, all the meme stocks, right? So we are quiet. We're trying to be nice, Peter. Okay, sounds good. I just want some money. Can't care about the fake mission statements. Yeah, I guess so, right? I guess so. Let's keep going here. I know Peter. I know Eric works in the healthcare space, so he's like, yeah, I just want to make my money. So another quote here from Andrew Toy, president and CTO of Clover Health, says the Clover system continues to be a key differentiator, which underpins our unique model. The Clover system has approximately 95,000 lives under management and is on pace to manage over 1 billion annualized revenue. So we've talked about that already. Most importantly, we believe the Clover system drives better outcomes for our members. Additionally, our non-GAAP non-GAAP normalized MCR here of returning MA members contributed to a provider life of Clov, blah 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 blah. I'm gonna skip a lot of this stuff here. 75 la 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 la. Again, some of these abbreviations here we're gonna talk about them later here. So I'm just gonna skip a bunch of that stuff for now. These guys are gonna cover them as well here. So the conference call starts in 7 minutes here. So I just want to get through this stuff as quick as possible, right? So I'm going to skip a lot of this stuff here, guys. Again, these guys are going to go over this stuff as well. So total revenue here, we talked about revenue, right? Right. So again, 171 million there. This quarter here, 112 million, right? So again, yeah, wow. Let's skip that stuff as well. Again, people mostly focus on the on revenue and things like that, right? So I'm just trying to give you guys the most important things here. So, second quarter here, total revenue was 412 million. Second quarter, up 140% increase compared to 172 million in the second quarter of 2020. This consisted of 195 million in Medicare Advantage premiums and 212 million in direct contracting revenue. Total lives. Okay, again, a lot of this stuff is repeating, guys. A lot of this stuff is repeating, so I'm gonna have to be skipping a lot of this stuff here. So yeah. Let's see here. We can always come back to this stuff here, guys. We can always come back to this and look at it in more detail. I just want to quickly scan over this before the conference call, so we can have an idea of what they're talking about there, right? So, again, if you look at every other platform, guys, every other platform, what are they talking about? They'll talk about the revenue. They'll talk about a 1 billion annualized revenue. They'll talk about the amount of customers that again, don't want to call them customers there, lives, right? Lives on the Clove. Those are the three main points, right? So again, a lot of these platforms don't focus on a lot of these other numbers on the thing here. So yeah, Steve, yeah, guys, don't forget to smash a like if you haven't yet. Smash a like, smash a like. hit that subscribe, share the link, guys. Before the conference call starts here, share the link, and let's get some more people in here. Healthcare is all about mission statements. Yeah, etc. is the end of. Yeah, in the end, it's all about the money. Eric, absolutely, absolutely.
All
Uh,
about the money, money, money. We don't need your money, money,
There you
money.
go. So financial outlook here for full year of 2021, Clover Health is providing the following guidance and commentary. Total revenue was expected to be in the range of 1.4 billion to 1.5 billion. This reflects a May revenue of 760 million to 790 million, and Medicare direct contracting revenue of 650 to 700 million. Medicare Advantage, la 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 la. Okay, I'll skip that as well there. Okay, interesting. So a projected revenue for the end of the year, so 1.4 billion to 1.5 billion. There's some, well, it's better than I don't want to compare this to AMC, guys. Don't want to compare. For the honestly, I'm just ready for the conference call here, guys. Just ready for the conference call. So and then they have their oh, this is the forward looking statements here and things like this, and then we have some more numbers in here, cash equivalent assets and things like this. Liabilities very important here. So okay, interesting. Warrants. Yeah, we'll come back and take a look. Warrants payable. Okay. We'll come back and take a look at all this stuff here, guys. We can come back here. Salaries and blah 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 blah. Okay. Honestly, I'm gonna go back to. We can always come back here, guys. I'll go over to the chart here, and then we can come back. Yeah, what are you thinking? What are you thinking?
I think it's good.
Yeah. Yeah.
I think it's good. I need to hear more from this conference call, though.
Yeah.
I don't
Exactly.
understand all the macronyms.
Yeah, don't worry, they will go over them. So, if you look at the chart here, guys, we had an initial excitement here, right? So again, this is market close, right? Market close and nice push here. I guess you're seeing that you might be seeing this number here, guys, because of the EPS. So we can talk about that later as well. So 2% according to trading view here, right? So 2%, 2.44% miss here. But again, we can talk about that later, right? So again, the market decides what it wants to use, guys, right? You can
10%.
miss with this number here. The
That's right.
market, yeah. So the
10,
market decides, and
20%.
yeah, exactly.
Doesn't
There you go.
either way.
Yep,
Whether you
exactly.
miss, whether you hit, whether you crush it, it can still go up or down 10 to 20%. We just saw that today multiple times. And what are we at right now? We're at 7% as we speak, right? And as you can see from the EPS, negative point like 3 or whatever it is, right? So there you go.
There you go. Stay positive, positive vibes, guys. Positive vibes. It's now a good time to
Go
buy.
Blaze.
It's now a good time to buy Clover, guys. What do you guys think in the live chat here? What do you guys think? It's long term, absolutely, Mark. Right for me, long term. I told you guys today, right? Even if we do miss here, Clove. I like what Clove does. It's long term for me. So yeah. What do you guys think? What are you guys thinking? So Daniel's asking, is now a good time to buy Clover Health? Yes or no, guys? Yes or no? I want to see what you guys are thinking here. Lucky number 7. Yeah, we don't want to see $7, guys. Don't want to see $7. Smashed Christians, smash the like. Yeah, guys, keep smashing that like, please, and thank you. Hit that subscribe, share the link. Conference call starts in 2 minutes here, guys. 2 minutes. So smash that like, hit that subscribe. Quickly, take a second, guys. Take a minute, share the link. Let's get all the Clover people in here so they are aware of what's going on. It's whole time, yeah. What's Clover? Mark says, "What's Clover?" So 2 free stocks, nice. Ren, oh yeah, you Weeble, yeah. Use Weeble. The link right in front and ahead of you there. So
Yep.
Clover is worth $9 max for now. Gary says worth $9 max. Well, we'll see, guys. We'll see. So conference call in a minute here. So I'm gonna quickly make sure we're good to go. Yeah, you guys can still hear the piano music there, right? They're still getting ready, guys. So Christian says no, it's worth 6.
Blaze, quick question. What are we doing for btbt tomorrow? It still says that there's an earnings tomorrow.
Honestly, don't know. I don't know. It's like it's not really clear. Not clear. I'll have to take. We'll have to take a look. Honestly, later. We can. Yeah, maybe.
It's pre-market tomorrow.
Yeah, exactly. We can talk about. Yeah, we can talk about that later. Trey. La. Yeah, long entry. Yeah, long entry. Hey. 1 second here, guys. Again, conference call starts here in about soon. Yeah, you can still hear the piano music there, right, guys? Yeah, some piano music still going on. So in a bit here, yes, buy it. No. And for you, Eric, yeah, buy and hold. The small guys always loses. Positive. Well, hopefully it's different here. Again, we know Clove likes to play these games, right, guys? Likes to play these games, nice push, and gives away the gains, right? So hopefully this time is a little bit different here, guys. And let me see here. So is this started? Soon, guys. Citadel. Well, let's just listen to the conference call here, guys. We'll be happy to see 9 and 10s. Yeah, Eric, exactly right. 9s and 10s for now. Yeah, I'm surprised they didn't run. But honestly, Martin, I'm surprised we're still sitting below $9 here, Martin. Maybe we're just waiting for tomorrow there. Maybe. But yeah, conference call starting soon, guys. So you guys can hear the piano there. So they'll be ready soon. Yeah, Christian, not sure about btbt there, so we'll have to take a look. Look, this time, Ross, some more. Yeah, I want some more this time, guys. I want $100 with you guys, Ross. Yeah, Carlos. Yeah, okay. I'm close with you, Carlos.
And thank you for standing by. Welcome to Clover Health's second quarter 2021 earnings call. At this time, all participants are in a listen-only mode. After the speaker's presentation,
What's that robot?
A question and answer session. To ask a question,
Neil, can you hear it properly?
Yes.
Press star 1 on your telephone. If you require any further assistance, please press star 0. It is my pleasure to hand the conference over to Derek Newman, Vice President of Investor Relations.
Good afternoon, everyone. Joining me on today's call is our CEO, Vivek Garipalli, our President and CTO, Andrew Choi, and our CFO, Joe Wagner. We will discuss second quarter results, recent trends, and answer your questions. This call is also being recorded. Before we get started, I would like to remind you that our second quarter earnings materials, including the release, are available on our website at cloverhealth.com. I'd also like to caution you that we may make forward-looking statements during today's call that are subject to risk and uncertainties. Factors that may cause actual results to differ materially from expectations are detailed in our SEC filings, including in the risk factors section of our annual report on Form 10-K for the year ended December 31st, 2020, and in our other periodic SEC filings, including our quarterly reports on Form 10-Q for the quarter ended June 30th, 2021. Information about non-GAAP financial measures referenced, including a reconciliation of these measures to GAAP measures, can also be found in the earnings materials available on our website. With that, I will now turn over the call to Vivek.
Thanks, Derek, and thanks everyone for joining us today. As I have said many times before, we have ambitious goals, delivering on our aggressive growth trajectory, improving health equity for America's underserved seniors, regardless of economic standing, and aligning incentives across a broken healthcare system. We are making progress toward those goals, both on a scale basis and serving more seniors. Getting into the key points from the quarter, we delivered $412 million in total revenue, up 140% year over year. We think this is important to note because we are going after the entire $1 trillion plus Medicare market, including both Medicare Advantage and fee-for-service. Our lives under Clover management nearly doubled to 129,000 versus last quarter. This growth was driven by the launch of direct contracting and our MA business continuing to grow steadily. Clover's system continues to be a differentiator, which Andrew will address in his commentary. But we continue to do a better job on health equity than most Medicare-focused companies by serving more minority or underserved beneficiaries. As a reminder, Clover MA plans over-index towards underserved populations, and historically, over 50% of our members are minorities versus an industry average of a little more than 30%. We expect these growth trends to only continue, and we believe we are building a strong foundation as we go after a bigger piece of the $1 trillion plus Medicare market we just referenced. Specifically, we recently announced our MA plans are expanding to another 101 counties in 2022, subject to CMS approval, and we are preparing for the fall annual enrollment period. We're adding more DCE providers and moving into new states, as evidenced by the recent press release announcing our DCE's expansion into Florida. The DCE efforts will also provide us with the ability to expand our MA plan more aggressively in the future as they help us build network adequacy faster, and importantly, also bring the Clover Assistant to many more physicians. While we have these long-term structural tailwinds in our business, COVID-19 continues to create near-term challenges and makes it difficult to holistically evaluate our progress. Specifically, it has impacted revenue via risk scores and medical expenses, especially in our largest market, New Jersey. It's worth pausing here to discuss Clover's mission as well as our economics. Our mission is to improve every life, and COVID has brought some of the most challenging conditions to our core markets, most notably New Jersey. We are proud to have helped our members during this time. We have paid more for care, relaxed utilization management protocols, focused on vaccinations, and we are proud to have done so. We even maintained care via the Clover Assistant and any communication mechanism that our members could support, video or just pure voice, even if the latter is not recognized by CMS as a face-to-face visit. While this has, of course, had an effect on our medical expenses and risk adjustment revenues, we wear that as a badge of honor. We will continue to do this through the pandemic, as this is who we are as a company and we are proud of it. That said, to help investors better evaluate Clover and get through the COVID-19 noise, we are providing additional disclosure around these impacts. This includes looking at direct COVID-19 costs, risk score changes, and shifts in utilization. The key takeaway from this exercise is that Clover's planned performance has been heavily impacted by COVID. In Q2 2020, this manifested itself with a record low MCR, where we had GAAP MCR of 70%, and in Q2 2021, with a record high GAAP MCR of 111%. This quarter, we are providing an updated view of what management believes our business looks like on a hypothetical COVID-less basis. We believe that these updated normalized measures better reflect the company's underlying fundamentals and provide a more meaningful view of the company's results outside of the COVID environment. Applying this new normalized non-GAAP methodology, last year, our normalized Q2 MCR was 97.5%, and this year it was 97.0%. It's hard to predict when the impact from COVID-19 will be gone, especially with recent variants, but we are pursuing long-term improvements to MCR, including driving additional Clover Assistant coverage, significant benefit from potential improved star ratings, and potential upside from improvements in internal processes such as management, which are underway. Shifting to our org, we continue to strengthen our team, and we recently made 2 key hires to help propel our growth. We welcomed Prabdeep Singh, our Chief Growth Officer, and Justin Joseph, our new Chief Strategy Development Officer.
And Neil from Hot
Prab
Trades.
brings robust experience from disruptive tech companies such as Uber and WeWork, and will lead our member growth and service area expansion efforts. And Justin brings a wealth of experience driving global business development for healthcare, most recently at Palantir. He will be instrumental in helping Clover bridge healthcare and technology to drive strategic partnerships. We also announced that our CFO, Joe Wagner, will be moving on. Joe has been a true partner on our journey, and we wish him and his family the very best. Mark Herbers will serve as interim chief financial officer while we conduct a search for a permanent CFO. Mark has served as CFO for a number of public and private healthcare organizations and has over 20 years of experience in the sector. He has been working closely with Joe and our entire finance team since the announcement, and I am confident it will be a smooth transition. We are in an exciting phase of growth. We're passionate that we can make healthcare better for seniors, especially those that are underserved. We look forward to delivering on this goal and providing proof points as our journey progresses. Andrew?
Thanks, Vivek. I'm similarly excited about the growth and scale we are reporting this quarter, especially around direct contracting. I have a few comments to point to what I think are indicators of success in our unique Clover Assistant model. As a reminder, our vision is to transform healthcare through personalized, data-driven primary care powered by the Clover Assistant. And unlike most other approaches, we aim to do that over a wide, open network of physicians that gives maximum flexibility and choice to our Clover members. By doing this, we believe we can access the full potential of the $1 trillion Medicare market, as evidenced by our ability to use the Clover Assistant in both the Medicare Advantage market and the fee-for-service market via direct contracting. In both cases, and in contrast to other models, Medicare eligibles continue to see the physicians they wish to see, and we believe we can then deliver better outcomes and lower costs via CA. We believe that the success we've demonstrated building and scaling both programs, combined with the fact that very few healthcare companies even participate as significantly in both of these programs, is evidence of our differentiated ability to access this larger total addressable market. This is why I'm so excited that the Clover Assistant launched to the fee-for-service population in the last quarter via direct contracting. This has grown our lives under Clover Assistant management to around 95,000, which represents growth of 229% year over year. That same growth puts us on track to manage over $1 billion of annualized Medicare revenue via the Clover Assistant. This growth is not only important to driving our financial results, but we believe it enables the Clover Assistant to get better from a direct feedback loop with physicians, a key engineering differentiator and moat for CA development. We currently have over 27,000 Clover Assistant sessions a month, with an average of 9 data-informed tasks servicing per session, and our engagement rate has remained strong at around 90%. We're thrilled by this level of engagement with physicians, and we continue to build more features to enhance our capabilities in this area, for example, via EHR integrations. To that point, we see that the Clover Assistant is making a real difference in terms of our medical care ratio, as we help arm providers with data to better diagnose and treat conditions. Returning members in the first half of 2021 who saw a CA-enabled provider continue to have lower normalized NCRs than those who did not, 89.8% versus 97%. Additionally, this 720 basis point differential grew compared to the 2020 differential. A reminder, this is on a normalized basis. On an unnormalized basis, this incurred MCR differential, which we have historically reported, is even more significant, approximately 1,700 basis points. Ultimately, this is critical because the returning member CA MCR is the number we consider to be the most appropriate statistic to assess our ability to manage Medicare over a wide PPO or fee-for-service network. As you can see, the Clover Assistant has consistently delivered strong impact, and we will aim to accelerate our feature launch cadence going forward. For example, we recently announced new support in CA for FHIR interoperability standards, and we expect that to streamline our capabilities in the area of EHR integration. We also are always looking to launch new clinical capabilities to help manage the chronic conditions that are endemic to our member population, whether that be around oncology, diabetes, chronic kidney disease, or other. As these features launch, we expect the engagement, reach, and efficacy of the Clover Assistant platform to only increase. With that, I will now hand it to Joe for the financial update.
Thanks, Andrew. We are thrilled to have delivered $412 million in revenue in the second quarter, up 140% year over year. This growth is driven by the launch of direct contracting and growth in our MA membership. As of quarter end, we now have approximately 129,000 lives under Clover management, roughly double the second quarter of 2020. This is comprised of MA membership and direct contracting lives of 66,600 and 62,000, respectively, as of June 30th, 2021. Moving to MCR, our net medical claims incurred for the quarter were $459 million, up year over year, primarily due to the inclusion of direct contracting. As Vivek discussed, COVID-19 continues to impact the gap MCRs as we incurred significant direct costs caring for members that were diagnosed with COVID-19, though less than last quarter, and we saw increased utilization from outpatient deferred care and chronic conditions that weren't diagnosed during the pandemic. This impact was amplified as our largest markets are in New Jersey and New York, where the impact from COVID-19 and the measures to mitigate it have been outsized. In Q2, our MA gap MCR was 111%. We estimate that direct COVID costs were 490 basis points, prior period development was 200 basis points, excess utilization due to COVID was 330 basis points, and risk adjustment normalization was 380 basis points. This equates to a normalized non-gap MCR of approximately 97%. Our final financial results for direct contracting will not be finalized until the CMS reconciliation for year one occurs, so there remains a lot of moving parts. With that said, direct contracting net medical claims incurred on a GAAP basis were $241.9 million and were impacted by the same COVID-19 factors as our MA plans, as roughly 75% of our DCE lives are in either New Jersey or New York. We don't yet have enough data to provide a normalized result for DCE, but plan to do so in the next quarter or two. Two other factors also worth highlighting. We understand that CMS may retrospectively trend adjust benchmarks, which could benefit us, but it's unclear whether and to what extent that will happen. And as the DCE program is new, we expect financial performance to improve as a result of ramping of clinical initiatives, timing of stop-loss recoupments, and other processes that will take some time to fully optimize. Second quarter non-GAAP adjusted operating expenses, which excludes non-cash stock-based compensation, were $64.8 million, representing 16% of total revenues, compared to $39.2 million and 23% of total revenues in the second quarter of 2020. This was in line with our expectations. Our adjusted EBITDA loss for the second quarter was negative $138.7 million, compared to last year's second quarter adjusted EBITDA of a positive $24.8 million, driven by the higher MCR and operational investments. After normalizing our business for the estimated impact of COVID, which includes our COVID MCR adjustments, a related premium deficiency reserve, and the fact that we don't yet have a normalized MCR for direct contracting, our normalized adjusted EBITDA loss for the quarter was negative $58.0 million. This quarter includes a non-cash loss of $134.5 million relating to a change in the fair value of the warrant liability. Clover had approximately 408.3 million shares outstanding at the end of the second quarter. Note that our share count will increase in the third quarter due to the cashless redemption of our warrants, and assuming all warrants are redeemed, this would equate to 9.6 million additional shares. Our cash equivalents, and investments totaled $630.3 million as of June 30, 2021. Despite near-term impacts and volatility, especially around expenses due to COVID, we expect to continue delivering solid revenue growth as we continue to expand our market share and optimize the direct contracting segment. For full year 2021, total revenues are expected to be in the range of $1.4 billion to $1.5 billion. This reflects MA revenue of $760 million to $790 million and Medicare direct contracting revenue of $650 million to $700 million. We are reaffirming our guidance that Medicare Advantage membership is expected to be in the range of 68,000 to 70,000 by December 31st, 2021. Direct contracting beneficiaries are expected to remain roughly flat for the remainder of the year. Further, we expect a significant increase in total aligned beneficiaries on January 1st, 2022, when claims aligned beneficiaries for 2022 become active. Normalized non-GAAP MCR for Medicare Advantage, which again adjusts for the impacts of COVID-19, is expected to be in the range of 94% to 97% for full year 2021. We estimate full year non-GAAP adjusted operating expenses, which excludes stock-based compensation expense, will remain within the range of $250 to $270 million. As a percentage of revenue, these expenses are expected to be 16% of revenue in the second half of 2021, compared to 21% in the first half of 2021 and 22% for full year 2020. Normalized adjusted EBITDA loss is expected to be in the range of negative $250 million to negative $210 million. This range does not reflect a normalized MCR for direct contracting, something again that we plan to have in place in the next quarter or two, or any adjustments to the benchmarks as we don't yet have enough information on potential timing or magnitude. Note that we are not providing net loss guidance due to the potential for significant variability of several components of net income, including mark-to-market accounting of the fair value of the warrant liability that we discussed earlier. Wrapping up, I'll reiterate what I said last quarter. We are seeing encouraging traction across our business, but we are only in the early innings. We continue to build Clover for the long term, and we have several levers to drive growth and initiatives underway to improve our cost profile. I look forward to watching Clover achieve its massive potential, although I will be doing it from the sidelines. I'll now hand it back over to Vivek for closing remarks. Thank you, Joe. I am proud of the Clover team for accomplishing so much already this year. Despite the impact of our achievements, we are only scratching the surface. We believe that we are pursuing operational initiatives that demonstrate our commitment to our guiding mission, improve every life. We will continue to focus on delivering on our strategic priorities, and we look forward to demonstrating our progress in the quarters and years to come. Operator, we're ready for questions.
Thank you. And we will now begin our Q&A portion of today's call. Following the live Q&A with discovering analysts, Clover's management will be addressing questions from the retail community. Again, if you have a question, press *1 on your telephone, and to withdraw the question, press the # or # key. Please stand by while we compile the Q&A roster.
While they're doing that, guys, take a second and smash a like, guys. Smash the like, hit that subscribe. So they're setting up the questions now. Let us know what you think
Our
about the
first
call.
question is from Jailendra Singh with Credit Suisse.
Yeah, good afternoon, everyone. This is Carlos Contreras in for Jailendra. And great quarter. So the first question I had for you guys is I just was wondering if you could flesh out a little bit on the utilization trends. What kind of risks are you building into your assumptions for second half from here? And also any data around what % of your members are currently vaccinated?
Hi, it's Vivek. Hey, thanks for the question. Appreciate the kind words. I think in terms of overall utilization, it's actually, from our perspective, really, and maybe for other plans as well, pretty difficult to project out for second half, just particularly in terms of COVID impact. So, hence why we presented our data on a normalized basis. From a vaccination perspective, in terms of data we have access to from a claims perspective, it's not going to always be complete from on claims in terms of who has got vaccinated. But when we look at overall data, take New Jersey, for example, where we have a large majority of our members in. New Jersey data shows that over 80% of individuals over 65 are fully vaccinated. So we believe that's where our membership stands, but we're still pressure testing that data via outreach surveys and so forth.
Okay. One other question, just really quickly on direct contracting. I think you guys noted flat, if I heard it correctly. I was just curious since I think you had guided for 700K before. Just wanted to double check on that. Thank you.
And just was your question around rest of year guidance? Just want to make sure I'm answering the...
Yeah, correct.
Yeah, so I think just in terms of the program itself, so a lot of the rules are still a bit in flux from CMS's perspective, CMMI's perspective, in terms of what is permitted and not permitted on involuntary alignment in terms of process-wise. So I think we'll learn more about that over the next quarter or two. And in general, our direct contracting model is much more focused on signing up net new practices, with the vast majority of our lives we think will come from claims alignment. So, practices we're signing up now, we'll see an impact on claims alignment starting January of next year. But, putting that aside, as some of the guidance gets clarified in terms of voluntary alignment, we do think there is a meaningful opportunity over time to enroll folks via voluntary alignment.
In terms of members, sorry, maybe I didn't make that clear. Thank you.
In terms of lives, yeah.
Yes, lives. If it was flat, that's what my question was.
Yeah, I think for the rest of the year, it's hard for us to really project out what that's going to look like. But I think what we can say is that the vast majority of increase generally is going to come from year over year, driven by claims alignment.
Okay, thank you.
Our next question comes from Kevin Fischbeck with Bank of America.
Okay, great, thanks. I guess just maybe to follow up on that point. So then I guess it's the right way to think about it that, whatever growth rate we were expecting you to pick up next year, it should be off of that lower base. It's not like the number necessarily has been pushed back to a bigger January 1 increase per se. It's just that it's more going to be about claims alignment than it's going to be about voluntary alignment. So, it's really kind of a lower base that we should be using, as well as, the ending run rate.
Yeah, in terms of next year, we're now not giving any incremental guidance. We do understand we haven't shared any data externally yet with any of the conversations and status of conversations we've been having with new practices that have yet to join our DC. And so, we are aware of that. That probably does make it a little bit difficult to understand in terms of projecting next year. But, at the appropriate time, we'll share more information around that.
Okay. And then I guess this is one of the questions I've been asking pretty much all the companies, is just when we see MLR coming in higher, and in this case, negative PPD as well, I guess, how confident are you that, what's happening here is purely COVID related versus some, underlying higher, long-term trend? I guess, what's your visibility into, getting back to a normal trajectory for next year for MLR? Should we expect MLR to be higher next year as well?
Yeah. So and we've definitely been following other companies as well, just to make sure we're getting a complete perspective, because it's definitely a phenomenon, an unfortunate phenomenon for all organizations in healthcare and obviously individuals. So I think our normalized MCR calculation, we feel really good about it from the perspective of we believe it's intellectually honest, and importantly, it's really how we look at our business internally. So if we just think about kind of high level, MCR has two components. You've got the revenue side, and you've got the MedX side. So last year you had a couple components. You had a lower utilization of services. So essentially a artificial compression in medical expenses. But then you also had an artificial drop in primary care visits, specialist visits, which in turn leads to an artificial drop in risk adjustment this year. Artificial meaning not normal. And so there's an imputed normalization of that risk adjustment that will impute into next year's revenue. So to kind of the latter part of your question, if there's a component of MedX this year, to your point, that could be driven by exacerbation of conditions, that's also going to show up in risk adjustment next year, because we're talking about complexity of conditions. So just as a basic example, diabetes to maybe diabetes with complications. So that's why we're reasonably confident that next year, just in terms of the way the calendar years work in Medicare from an MCR perspective, they'll be much closer to what we think will be kind of the normal MCR for next year.
Yeah, okay. Hey, Kevin, it's Joe. One thing I'll add is, we enhance kind of our analysis of our claims over this quarter with, using third-party actuaries in addition to our in-house team. And I think what we learned from that was, we were able to kind of say, okay, there's a piece of this that clearly is deferred. And that piece will likely be moderated later in the year as the patients kind of complete their services. And then there's kind of this, along with that, the pent-up demand. And then to Vivek's point, to the extent that there is a morbidity change, that's the piece then that's going to be captured, via risk score. So again, it's tough to predict where it's going to be in the second half of the year. But again, we took a really, really hard look at this. Obviously, you can see from the press release that we spent a lot of time, kind of helping to, understand what pieces, really went into our normalized MCR calculation. And to Vivek's point, we feel comfortable there's a piece of it, that's likely going to continue, which will ultimately be captured in risk scores. But then there is a piece that will be moderated as patients complete those deferred services.
Okay. All right, so yeah, one way or another, MLR should look better next year.
And thanks, Joe. Just one more interesting point to add that is very relevant to how we think about our business internally. So we realized the press release we shared today was fairly lengthy, but buried in there, it's the first time we've given an illustrative breakout of MCR across counties in terms of just cohorts. So you'll see that the top 6 counties in terms of size of membership, it's about 59% of our total members. We use Q1 there just because it's more fully run out claims, but you'll see the normalized MCR there is 86.5%. And you'll see individuals in those counties, we had over a 70% CA visit rate. And then you'll see in the rest of the counties, MCR was a little over 100% with CA visit rate under 40%. And again, newer counties. And so we'll share more information in the coming quarters in some of these breakouts, but that's really to kind of give folks an understanding as to how our counties evolve, how MCRs evolve as we get more and more CA coverage as well.
Okay. And actually, that might answer my last question, but I was going to ask about the improvement, because you guys are looking at this adjusted MLR number and kind of saying that's your best view about what underlying trend is, and it looks like it went from 97.5 down to 97, and which isn't a terribly big improvement year over year. And is the answer just this new counties versus old counties, or is there anything else that you would kind of point to as to how to think about a 50 basis point improvement versus what the kind of long-term MLR targets are?
Yeah, I think appreciate that call out. So I think directionally what you said on the latter point is totally accurate. The only adjustment I would make to that is it's not necessarily newer or older, but there's definitely a correlation between length of time we've been in a county and CA coverage. And so the way to think about whether it's the 92% normalized MCR in Q1 or the 97% normalized in Q2 or the little over 94% normalized for first half this year, the way we think about it is how are our markets doing from a CA coverage standpoint? And so I think that's really the lever. So as you think about building your financial models, the biggest lever for us is CA coverage, and this is sort of the first data point we've shared externally from an illustrative perspective on the impact of CA coverage.
Okay, that's actually maybe there's just a follow up on that point. Then, do you have any stats about like how fast CA coverage is expanding in those two types of geographies? I guess it'd be interesting to see kind of how what the progression normally is for counties, so we can kind of maybe build it into our models a little bit better.
Yeah, I think unfortunately I can't give you sort of the most precise answer right now, just in the sense of I'll phrase it this way, which is our ability to scale Clover Assistant and achieve coverage today is more rapid than it was a year ago or 2 years ago. I think there's a couple reasons for that. So reason number one is Andrew and his team have led a pretty meaningful size wholesale move of our original Clover Assistant platform onto our new platform, which DCE was built on. And so that's going to dramatically ease the use of or ease the process of onboarding. And we shared some information yesterday on our first kind of what we think is a pretty meaningful accomplishment on being able to a first version of relevant integration to various EHR platforms. That's going to help as well. And I think the other really interesting thing when we think about the ability to leverage Clover Assistant across different lines of business. And so if a practice that, let's say, has Clover MA lives, but is not yet on Clover Assistant, but let's say signs up for direct contracting, let's say that practice is going live in January 1st, direct contracting would have essentially been the prong to unlock coverage for that practice. So if we take practices that might have less than 10 Clover MA lives, but then signs up for direct contracting, the probability of that practice getting live on Clover Assistant goes up.
Okay, makes sense. Thank you.
Our next question comes from Lisa Gill with JP Morgan.
Yeah, hi, good afternoon. This is Cal Sternick on for Lisa. Can you just walk through some of the changes in the direct contracting revenue recognition? Because obviously it was sort of a big step up in your guidance versus your prior expectations. And just want to be clear on, what the mechanics are and, what changed, from the first quarter. Thanks.
Yeah. Hey, I can take that one. We've been aware, since last year that many of our, other publicly traded companies with a presence have been giving direction that the entirety of their at-risk Medicare spend would be, fully recorded as revenue on their income statements. The one thing I'll say is every direct contracting entity is unique in terms of the relationship with the physicians. Some are fully owned, some are contracted, and so we knew kind of all along there was not one answer, and there continues to be kind of not one answer that is relevant for the entire industry. And so because of that, we took a conservative position based on discussions, with our auditors at the time. As we continued those, as we continued those discussions, we knew there was a chance that the full at-risk revenue wouldn't be permitted to be recorded, new government program and no final consensus view. As we looked at it more, we've had, kind of more discussions with the SEC, via not only our auditors, but other accounting firms. So we determined really, in this quarter, that it was appropriate for all of our at-risk Medicare spend to be recorded as revenue. And then therefore, that's why, we're adjusting our, not only our accounting for that, but also our guidance going forward. And I think, for us, it makes sense, because of the fact that we viewed that business very much based on benchmark, as opposed to kind of the small piece of revenue. And obviously that has an impact on our revenue guidance. But again, it was really just about unique circumstances of each individual DCE and our desire to be conservative and to not overpromise something on the revenue side that would be, end up being materially smaller. Thanks, Trey. And I think just to add to that, the revenue recognition is definitely not a surprise to us, but I think to Joe's point, given it was a new program, our auditor was at the time we were making terminations around this, they were not in a position to give 100% confirmation on how accounting would work. We felt it was appropriate to take that into account as we were having conversations externally.
Okay. And you also mentioned that CMS could retrospectively trend the benchmarks. Can you just maybe elaborate a bit on how that could impact your revenue recognition and when you'd expect to, get some more guidance back on that?
Yeah, I can handle that one. On a quarterly basis, CMS has the ability to make retroactive adjustments to the trend factor that was used in determining benchmarks. And so, as opposed to MA, where, you've got a lot of things that are fixed, and you've got, I would say, limited movement, you've got risk scores, but obviously, your underlying bid data that's used to determine your revenue is fairly fixed. On direct contracting, again, there is some movement, and some of that may not be complete until the final settlement for a given year. And so, again, these are quarterly adjustments that CMS makes, looking at both national data as well as regional data to the trend factors that they use to determine benchmarks. And so for us, we can't, we don't know exactly which way it's going to go. Obviously, we provide CMS our data, the early initial data that we have, but those are adjustments that we will record as those trend adjustments are made by CMS. It could be, Q3, it could be Q4. We don't know, but we do know that CMS has the ability to retroactively make those adjustments under the confines of the program.
Got it. And then for direct contracting, I think a while ago, you guys had suggested that it could be roughly break even for the year. And it looks like the MLR was, above this quarter, but how are you thinking about margins and profitability for direct contracting for the balance of the year?
I think at this point, because all we have is Q2, and there's still, I think we may have only received, April and May data enough in a format for us to form any initial views. The approach we took is to really not form any conclusions on a normalized basis. We think probably the next quarter or two, as Joe referenced earlier, we'll be in a better position to have a clear understanding. And there's a lot of programs that we're putting in place as well that'll take effect in the back half.
All right. And just last one for me. You mentioned you saw some higher outpatient costs. Can you talk about anything? I mean, is there anything notable you're seeing on the inpatient side? And then, how do you see direct COVID costs and non-COVID utilization tracking, from where things stand today? Oh, and then on the PDR also, how much of that charge is related to MA versus direct contracting ones?
Yep. Joe, if you want to hit the PDR and if you want to hit the PDR and inpatient, I can hit kind of our thinking on COVID going forward.
Yeah. So I'll answer again 2 of those. On the PDR, that's really related to our MA business. And again, that's just an intra-year charge. It basically we it was accrued this quarter. It's going to be amortized in over the next 2 quarters. So that's just really just a timing issue on the MA side. So that's fully on the MA side. And then I'll hit the inpatient, and then Vivek can maybe talk a little bit about just our thoughts on trends going forward. On the inpatient side, I mean, again, obviously we've seen direct COVID costs, which we call out in our normalized MCR calculations. So that's kind of there for all to see. We have not seen necessarily an acuity increase on the inpatient side that we view, kind of in any material way. Again, what we're seeing as we call out in the normalized calculation is, exacerbation of some conditions, that are manifesting themselves on the outpatient side. Again, I would say nothing worth calling out on the inpatient side, that we, that is kind of, from a future standpoint that give us pause, just in terms of higher inpatient acuity at this point.
Thanks, Joe. And just in terms as we think about COVID impact for remainder of the year, I mean, obviously COVID doesn't care about calendar years. And so just in terms of, just from my personal view, so not representing Clover's view, but just my personal view on, how I think about COVID impact. And so, obviously the Delta variant is really what's driving an uptick in hospital utilization. I think at the same time, as FDA approval comes, pretty soon, probably starting with Pfizer and Moderna, to my knowledge, I think it's probably the first approval for an mRNA vaccine. And so subsequent approvals of booster shots are going to be, I think, pretty rapid. And you're seeing vaccine production capacity going up pretty dramatically, probably coming online, closer to the back half or towards the end of the back half of this year. And so, I would say greater than 50% chance we'll see more variants, particularly coming from countries that have pretty low vaccination rates and derived from those who are immunocompromised. But I do think the increased capacity of vaccine production, the ability to roll out booster shots, taking into account the new variants that eventually come, we will see, at least in the United States, I think a path to more and more normalization over the next year to 18 months, just from like a science perspective, that from my perspective seems like a probable outcome.
Great. Thanks very much.
Our next question comes from Ralph Jacoby with Citi.
Thanks. Just hopefully a quick few for me. I guess one, the change in the normalized MLR definition from 1Q, that's just largely risk adjustment, or is there other stuff in terms of the changes and how you looked at it 1Q to 2Q?
Yeah, so it's good. Oh, sorry, go ahead, Joey. Go ahead, Jeff. Yeah, Ralph. Yeah, sorry. Yeah, Ralph. That's essentially it. I mean, what we determined, really in the second quarter is, the way that we run the business internally is to, make sure that we are extracting anything that we think is temporary as it relates to COVID. And so what we've done is say, okay, in the second quarter, obviously you see our estimate of pent-up demand and deferred care there as a result of COVID. And then also, really kind of finalizing and firming up that risk adjustment piece, with the help of our actuarial team. So those are the main differences. And again, this is just a definition that we really feel comfortable about as we think about how we run our business.
Okay, all right, fair enough. And then the MA revenue guidance, I think a little bit lower, but the live stayed the same. Is that just related to risk adjustment, or what changed that revenue assumption?
Ralph, that's more just timing more than anything else. We're seeing already kind of some more growth in the third quarter. The growth is probably a little bit more back ended for the back of the year.
And then, I guess, how with the total aggregate, but clearly it's a new population base. Your existing MA still has some benefit from Clover Assist. I guess I'm just trying to get a sense of how much visibility you really have on that point. Sounds like you only had April and May. So how comfortable, I guess, are you guys in terms of how you booked that this quarter from a GAAP perspective?
Yeah, no, I think that those numbers are fairly right on, Ralph. And I think, because of the fact that we had very limited data, we took a conservative position in how we, recorded that. As Vivek said, there are some timing things later in the year as it relates to stop loss and some other things, which will end up flowing through, that will likely benefit us in the second half, along with, some assumptions on, pickup of Clover Assistant and things like that. And so I would say we booked it conservatively. We feel really comfortable about where we are later in the year. But again, because of the fact that we didn't have a ton of visibility, we had, kind of April and May claims and not much else. We took a conservative view of that. And again, we don't have enough data yet to even normalize. We do know that there were some COVID costs in there, and there's clearly some pent-up demand. We haven't yet been able to kind of quantify that. So again, I think we haven't seen anything in that population that was, I'd say, different than what we had expected. But again, I do think that what you see here in Q2 represents a conservative view of MCR, at least based on that limited data that we have.
Okay, fair enough. Thank you.
All right, starting with some of the retail community questions we got. The first one's coming from Otto von Schecklenberg, and this will go to Andrew Toy. What advantages does Clover Assistant have compared to the competitor software you are trying to replace or compete with?
Thanks for that question from Otto. As we discussed here, we're definitely seeing that the effect of MLR scales with Clover Assistant visit rate in our top counties, and that's in the press release. And we think that there's a lot of advantages that are coming from Clover Assistant because of that. Quickly running through them, number one, we are able to provide a longitudinal view of data, which means versus just having internally to your EHR, internally to your health system, most physicians just have access to that information. Because we are the health plan, we can provide additional data from all aspects of a person's care team, and that is flows through Clover Assistant, and that's a big advantage. Second of all, Clover Assistant is designed to be used for 5 minutes per primary care visit and delivers personalized custom data and tasks. And that's something which is a lot easier for a physician to consume versus long, uncustomized sort of annual wellness visits or software, which is what tends to be the norm. So we're very personalized, very focused within those 5 minutes per visit, and I think we get a lot of benefit from that as well. And then thirdly, we have a lot of effort from our clinical and product teams to provide analytics and analysis for what is the best use all time within any given visits to let PCPs know where to focus their attention. And so that might mean that we might even be directing their attention to help manage conditions that are outside the primary complaint, drawing them to their attention to recent hospitalizations, and we see a lot of engagement with those features as well. So I think that there's a lot of differentiation in the platform from both the technology fitting and the data point perspective. Plus, we're seeing that impact flow through to our markets and our MLR, as we just discussed.
Great. The next question will be targeted towards Vivek from Livinit, who happens to post a lot of Clover material on the retail boards. How is DC revenue being realized, and how do the unit economics compare to Medicare Advantage? How often do CA contracted providers take on risk-sharing arrangements with Clover? Vivek?
Thanks, Andrew. Just want to echo that there's definitely been some great materials. I think there was a Medium post written by him about direct contract, and I found to be one of the more thoughtful pieces out there. Just in terms of, and just a full question, in terms of just unit economics of DC revenue versus MA, I think what's really interesting about the way we've constructed our business model is it's very much provider focused. And so when we think about traditional payer organizations, we have a separate operating infrastructure to manage each line of business. The way we think about our business is really managing the relationship with the physician effectively. And so as part of that, the incremental OpEx to manage DC lives is much less relative to the Clover MA lives that are in that practice. So there's a lot of operating synergies as practice partners with us, not just in Clover MA, but on direct contracting. And then from a gross margin standpoint, we do believe there's a meaningful opportunity over time to generate pretty reasonable and attractive margins on direct contracting. I'm sorry, do you mind mentioning the other two components of the question?
The last part of the question was, how often do CA contracted providers take on risk sharing agreements with Clover?
Yep. So we definitely have a bit of a unique lens on as relates to Medicare Advantage and risk sharing. So within Medicare Advantage, risk sharing is called full capitation. So that's where a practice will get a significant percentage of premiums. And so those who follow a lot of the news about Medicare Advantage, there's definitely been a lot of controversy around risk adjustment and risk adjustment inflation. What we've seen and learned and talking to industry experts and folks who have worked at various large payers, a huge amount of the risk adjustment inflation happens within practices that are fully capitated. I think this is starting to get more and more well understood by folks out in the regulatory community and so forth. And so, we do think full capitation a lot of times can actually incentivize the wrong behavior, particularly around risk adjustment coding. And so one of the things that we're very proud of at Clover is setting up our financial alignment with physicians that removes any of those incentives. And so when we think about alignment with physicians, it's really around ensuring that they're using the Clover Assistant and getting value out of it from a clinical perspective for their patients, but ensuring there's no incentives one way or the other around coding. And so, the right way to think about risk sharing is if it's really aligning folks around cost management in a way that makes sense for the patient. But unfortunately, a huge amount of the value that plans and practices get around risk sharing is actually around risk adjustment.
Great. And our final retail question, which is going to be targeted towards Andrew, comes from Mobamba17. How do you market Clover Assistant to physicians?
Yeah, great question. So as a reminder, Clover Assistant is our flagship technology platform, but we don't charge for it directly to physicians. We provide it to them to help them provide better personalized data-driven primary care, which helps our members, it helps physicians, and it then definitely helps Clover plan performance from there. So we don't actually have to charge for the software. So we don't actually go out there and market it per se as a piece of software that we are selling, but we do say we want to pay more, pay well for data-driven primary care, and Clover Assistant is our means of doing that. In addition to that, we constantly measure our net promoter scores, and we measure our satisfaction rate with physicians, which we then share, and we tell them, hey, we are always the feedback. We're measuring what features you find most useful in our data, and we're spending more R&D time there. And because we are very reactive to the feedback from physicians, we're able to then continually drive up that engagement rate that I talked about earlier, which then leads to the higher visit rates that Vivek talked about in those top counties. And so constantly investing over there. So when we're taking a meeting with a physician group, we emphasize we care a lot about primary care. We want to share data and clinical insight to help them do a better job. Just like Vivek said just now, we also share that we want to pay very fairly for that without putting them at risk or via use or capitation methods, but we want to give them our software. And because of that, we've achieved very, very high engagement rates with Clover Assistant. The thing I'm really excited about is we achieved all of that without yet having launched our wave of EHR integrations, which are upcoming. And those will be coming up very soon on the CA 2.0 platform. And we think that will only drive those engagement rates even further up. And we'll see even more impact from CA.
Great, operator. I think this concludes our retail portion of the call. Vivek, you want to say anything for closing comments?
Thanks, Derek. Just want to give a thank you for the whole Clover team on their efforts so far this year. And thank you again to Joe. And you've been a great partner to all of us at Clover. And we are extremely excited about the rest of the year and many, many quarters to come. I think just to reiterate, we believe we're in the very, very early innings of what's possible at Clover.
Thank you. And this concludes today's conference. Thank you for your participation, and you may...
What are you guys thinking? What are you guys thinking? Again, the call was a little bit boring, right, guys? But again, the market seems to like, at least initially, the numbers, right? Again, as long as we're not flushing here, guys, again, like a good... Not quite sure where this is going short term. Not quite sure what the reaction is going to be tomorrow morning. Try not to focus too much on this reaction here now because, again, low volume after hours. But again, Clove for me, not sure short term, long term, a good play, right? So I like Clove. Guys. So let us know what you're thinking, guys. Good or bad? Let us know in the chat.
Clove is good long term.
Yep, there you go. Good or bad, guys? Good or bad? Let us know. Again, while you're doing that, guys, take a second, smash a like if you haven't yet. Come on, guys, smash that like, hit that subscribe, shit. Yeah, so there you go. Let us know, good or bad, guys. I know, no FUD. No FUD, guys.
No FUD. No FUD. Well, I don't know. I think the Clove call can FUD itself.
Again, do you guys see like the difference between the AMC call and the Clove call, guys? Where are the questions coming from? All right, when it was time for AMC to take those calls from banks, from actual good question, they're like, yeah, you know what, we don't have time. But I like the way Clove did it, guys. I like the way Clove did it them. So again, this is low volume after our reaction here, so we're really gonna need to wait till pre-market tomorrow, right? So if you have any questions, let us know. Yeah, I like, again, Nicholas, absolutely. Could be, yeah, exactly, Nicholas. Yeah, again, as long as we're not flushing him, I like the call. This like long term,
yeah.
guys.
I think pre-market will set the sentiment for the rest of the day tomorrow.
Exactly. Yeah, tomorrow morning, guys. That's where it's gonna be at. For now, we can't really tell, right? Again, short term, not sure. Long term, good, right? So we know we have a level here, psychological level here at 850, right? So if we can find a way to close above 850 tomorrow, guys, that's going to be a positive. Then we're looking for $9, guys, please. $9. Let's at least close 9, and then look for 10, and then yeah. So again, support at 850 for now. $8 is what that we know of, right? So $8 is a very key level there. So $8.50, $8. On the upside, we have $9, $9.50, and then $10, right? $10 is going to be a huge level if we can even get there tomorrow. So That call was painful. I know that was slow, guys. There was really nothing there. It's
That was rough.
yeah, there was really nothing on the call there to hype stuff up. So yeah,
Yeah, we got
let's
all
go.
we needed from the report ourselves. So nothing new.
Exactly. Yeah. Yeah. No, Nicholas, again, that's exactly what I'm looking at, right? Nicholas, Humana, that's what I'm comparing these guys to, right? So again, you can tell that Humana keeps copying what these guys are doing, right? So I like it. I like it. Right? Yeah, right is having
Yeah.
a good
How about
right
them ride calls, Blaze? What's
what do I
up?
what do I have to do? What do you mean what's up? What am I doing right?
What do I have to do around here?
There you go, right? Hims is another one as well, right? So
Yeah.
there you go. Some good aftermarket reaction here. So again, let us know if you have any questions here. Jim gave them they're good. Good. Yeah, I know, Nicholas. Yeah, they've been working here. I know. I like the team, guys. I like the team. Take a big risk holding it through earnings. Glad I didn't get crushed. I know, Sabel, right? Honestly, I just wanted this thing not to flush him, right? So this is not bad. Not bad. Not bad. So
No, I'm not holding
this is
anything. I'm not holding anything, guys. I have no shares. 0.
in what?
In Clove.
You have
Clove.
options, don't you?
Exactly. I got options.
What are you trying to say, Neil?
People want to know. I got no shares. I'm just playing options. You want to know? Now you know, guys. Now you know. 850. 850 calls for Friday. Let's go.
There you go. To get some good news, yeah, let's see what happens tomorrow, guys. Again, this is after hours. There's not a whole lot going on here, right? As expected. Lack of volume. Volume is gonna come tomorrow morning, right? Volume will come. Same thing happened with AMC, guys. You guys remember? AMC very slow after hours after that call, and then the next morning it was fun, right? So again, hopefully we can have a nice run here tomorrow morning and gap up and go, right? Hopefully. Otherwise, we're watching again for $8, guys. Which is that $8 level is a really good support level, but it's becoming really annoying to sit at that level there. What are my predictions for tomorrow? I personally think we hit 10% day tomorrow, Nicholas. I would love to see 10% tomorrow. 10-20%, Nicholas. Start a nice run. I would like to see that.
9%,
so.
Yeah, see it at $9, $9.20. That'd be great.
Yeah, $9, huge level there. So,
Yep.
well,
That's a
is
huge psychological level.
Yep. Oh yeah, Nicholas, absolutely. Overvalued? Yeah. What are you guys thinking? Price targets, guys. Again, no timeline here. It's not tomorrow. It's not next week. It's not however long you want to go out. 5 years, 1 year, 1 day. What are your price targets for Clove? What are your price targets, guys? Let us know what your targets are. Will MMT? Will you cover
We're
MMT
doing
tomorrow?
MMAT tomorrow, please.
I
PLTR
don't-
tomorrow.
Yeah, we'll see, guys. We shall see.
There's a lot going on tomorrow.
Hmm?
Sundial tomorrow too.
SoFi, there are quite a few names tomorrow,
Yeah,
guys.
SoFi, yeah.
$19, yeah, you hope. $19, Clove. $12 in 2 weeks, 2 weeks out. Jordan, okay. I hope it gets to $19. Okay. Gary says 20 in 2 years. $20 in 2 years. Again, I see a good future there. Yeah. I guarantee 5 years will be above $9, virus. Yeah, guarantee. Yeah. There you go. Gary, you know nothing? Yeah, we all know nothing, guys.
Gary, killing me.
Guys, yeah, I want to see again, no timeline. I want to see Clove at $100 at some point. End of the year, 13 to 14, Christy. Okay, there you go. I want to see that $100 at some point, whether it's a squeeze, whether it's just fundamentals. Again, squeeze, fundamentals. I like those two things combined together. Yeah, Clover. Yeah. So annoyed. Yeah. I don't know. Yeah. I think it will get hit the previous size of 2885 in the near future. I have seen the pattern. You've seen before, Sabel. Yeah, absolutely. Yep.
I just found some shares and set stop loss, trailing stop, and we'll see what happens. Okay, M-Sense. Okay, we'll see. That's what you're supposed to do. Setting a trailing stop is exactly what you're supposed to do.
Yep. There you go, guys. Again, reminder, if you enjoyed the content, guys, don't forget to smash a like. If you haven't yet, smash the like, guys. Show some support. Hit that subscribe. And you have any questions, please ask, right? We're going to chill with you guys here for a few more minutes. So if you have any questions, please ask. $45 by December. I want to see some high numbers, guys. I want to see some high numbers from Clove. Let's, yeah. I want Fastly to hit $80. Jude, yeah. Oh, yeah. Oh, that's. Oh, Nas. So I'm gonna Nas. I'll have to call you back, Nas.
Naz is calling about ADA, bro.
Yeah, Nas. Yeah, I'll have to call her back.
Blaze, ADA. Look at ADA.
Uh, at least tomorrow. Joe, Clove to $11 tomorrow. I would love to see anything above 9. Honestly, for me, Clove $8.59. Again, let's start moving higher here, guys. We've been sitting and following AMC on the way down too much. I want to see uh. I want to see $9. I want to see 10 above 10. 10 would be a big level, right? Huge resistance level. There's some high numbers of and high numbers for Riot. Yeah, Riot is going to be very interesting to watch tomorrow. You know, hour and yeah. La 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 la. Thoughts on the statement? Income statement, operating expenses, and la. Too damn high. Too damn high. Again, like COVID has been an issue for a lot of these companies, right, Jimmy? Like they're just having to do other things that they not normally wouldn't have to do. Jimmy, some yeah. Yeah. So
Nigel, dude, I wish you the best, the very best.
watching
of
this
luck.
video.
Yeah, short and Clove. Right.
That's okay, Nigel. Right. Whatever you want to do.
Yeah, you do what you want to do. That's right. You do what you want to do. Good luck.
Yeah. What was the most positive news and the most negative? Most positive, Neil. Most positive would be the revenue, right? So again, revenue is a huge thing, right? Again, that's why you can see a lot of these, again, a lot of these platforms like CNBC, Benzinga. What are they spitting out, guys? They're spitting out 413 million in revenue. What else are they spitting out? They're spitting out the growth, right? Spitting out the 1 billion number annualized revenue, right? So managed by the Clover system there. Again, what's the negative there for you, Neil? Negatives.
Nothing was negative. Nothing was very surprising. Nothing really struck a nerve as anything that was so spectacular about Clove's earning statement there during that call. Right, only the $1 billion valuation. That's about it. That's the only thing that was really good for me. And the membership increase.
There you go. I think the membership is a huge one, right? So just continue growth there. Just continue growth. I'll take a look at that thing again tonight. At the whole document there tonight and see what I can come up with there. But yeah. If you guys have any positives and any negatives, please share in the chart. Let's see. Nicholas, right? So I'm trying to think of some negatives here, guys. Again, the reason I'm a little bit biased. Yeah, a little bit biased for me because again, like I see the long term future there. So when I'm thinking of negatives, guys, it's a little bit it's hard for me. Rubbish, absolute rubbish. And
no, Riot's earnings were rubbish as far as I know. I haven't even looked at it. I just looked at the estimated stuff. I just figured they're going to be rubbish. I haven't looked at Riot. I think they missed earnings though, but that was expected.
Yeah, Riot is doing a very similar thing. It's slightly up here.
And they have delays on their truck production. All kinds of different stuff going on.
There must be something. I don't know, maybe not, but there must be something good there. They're slightly up here after hours, so we'll see.
Even if you miss earnings, you can still go 10-20%.
Yep. There you go. The mystery. Let's go mystery. So good report, Nicholas. Yeah, again, I like it. Again, I like you guys know I like the management team. I've done a lot of research on them, so I like the team there. I think it's better than I'm not gonna say the name. What do you think about Ruth? No, Ruth announced earnings, or is it tomorrow? Ruth, let me see here. Is it today or tomorrow? After hours here, right? So they're having a nice little gap up here as well. You're gonna have to come back tomorrow. For us, we can take a look at the report tonight, and then come back tomorrow, Michael. Because we just wanted to look at Clove here a little bit. So again, just a quick recap here on Clove, guys. So I'm going to take a look at the daily chart here. We can see, again, this chart might be messy here, guys, because I've been watching this stuff for a bit now. I'm putting lines everywhere. So let's take a look at the chart here. Maybe not actually, right? So again, where's support for now, guys, on Clove here? Where's support? So I'm going to zoom out here. You can see the last 2 weeks or so, right? So last 2 weeks, so where have we been sitting at, guys? Again, it's $8. It's $8, right? So again,
again. Yeah.
And again, some really good support here, guys. Where do we need to break above? We need to break above this 850 level here. 850, 880, and then we need to ultimately get above $9, right? So if we can find a way to close above $9 here today, tomorrow, guys, that would be a huge positive, right? So, but for me, as long as we continue to hold 8 here, it looks okay here for now. So 850, 880 ish, $9, $10, and then once we break above 10, this level here, there's a lot of room to the upside there, right? So a lot of room. So again, this is quite messy here, guys. Right?
Oh yeah, that's a good times. Those are good times there.
Quite messy, guys. We've been talking about Clove quite a bit for some time now. So
yes, sir.
yeah. Was there Clove earnings? Basically, some good revenue. 400, and let me see here. Where's that article here? So let me see if I can quickly go back to the top of the article here, guys. Give me a second. So again, total revenue was 412 million, up 140% year over year. Lives under Clover management nearly doubled from the first quarter of approximately 129,000. Clover Assistant on track to manage over 1 billion of annualized revenue. So again, there's a reason why those points are at the very top of the statement there, because that's all they want you to focus on, right? So we can take a look at the rest of the stuff, the numbers at the bottom. So here you go. Yeah, guys, again, reminder, smash the like if you haven't yet. Let us know if you have any questions here for the last few minutes here, guys. And hit that subscribe if you haven't already. And if you're not a member yet, guys, come join us. Come join the community. So come join us in Discord. And yeah, we can hang out and do rubbish while we wait for it to eventually move here, guys. So yeah. Some rubbish, guys. Some rubbish. Not 2 billion like AMC. It's rubbish. It's not 2 billion. Yeah, except where did AMC make that money from? Mystery. Where did AMC make that money from? Right? Where did they make the money from? Mystery. That's the question. Where did AMC money come from? 1.1 billion was from what? Right? A lot of
shares.
Yeah, from taking it from retail investors, guys.
That too.
So yeah, and they're planning on AMC planning on raising there some. We'll see. We'll see. Drinks and popcorn, baby. Drinks and popcorn. Mystery says 2 billion from drinks and popcorn. That's funny. It's funny how you said it, Mystery. You know, you can't always like translate like words to the way someone says it, but the way I can almost like interpret what you're saying there. Are we at 7 yet? It's Christian? No, yeah, Christian. You're waiting for 7, Christian? Are you shorting it to 7, Christian? I think you are, right? Again, Christian, that's completely fine, right? Again, not sure where this thing is going short term here, but again, long term, I like it. So can we go to 7? Absolutely, right. Are we gonna go to 7? I don't know. No one knows, right? So again, fundamental play, good company. Short squeeze play. Yeah. So again, both of them, I like those two combined. So everything will run up. Well, I want to see some gains tomorrow, guys. Don't forget the mascot, Virgo. The mascot. Yeah.
Yeah, no, right.
Clove doesn't need a mascot. It has the Leafs. The Leafs. Yeah, guys. 2 more minutes here, guys. 2 more minutes. Again, let us know. Thank you guys for chilling, for hanging out with us and listening to the call.
Oh, yeah. We had a good day today, guys. I know a lot of us made a lot of money today. Looking forward to
a lot of money. Where did a lot of money come from?
Yes, Blaze. Yes. Oh yeah. There's always money to be made, Blaze. Up or down.
Yeah. A lot of us made a lot of money. Who made money, Neil?
I did. I made money today.
Okay, where are the other lot of us?
They'll come forward. Let them come forward. But hey, tomorrow's a new day. Tomorrow's a new day, Blaze. Okay. A lot of things to look forward to. A lot of things to look forward to, right? Right.
There you go. Okay. Because I don't know, we didn't do a lot of scalping today, guys. We were just watching. We were watching mostly Doge and talk about Doge. So I don't know where these gains are coming from. Christian, absolutely, Christian. Thank you. Thank you. Unbelievable, Christy. It's like I know a lot of us made a lot of money today. Come on, we were watching Doge all day long.
Hey, ask Mindy.
Yeah. Mindy was sick and sleeping all day, Leo.
And made gains. This just goes to show you don't have to do anything. You can still make gains.
From Crypto Leona? Yeah, that's okay. You made some ice cream money? That's okay, guys. Good job. Good job.
Thanks, Christian. Appreciate it.
No, yeah, Jimmy, for you. That's okay, Jimmy. We'll all have our days, guys. All have our days, guys. That's completely okay there. So yeah, it's the gains, Will. I know Virgo made some gains today. She was holding AHPI, I think. Yeah, some a nice run there.
There
Still
you go. There you go.
You didn't know that, Neo.
No, I didn't
I
know.
knew
I'm
that.
just saying. There you go. Example.
Yeah. You made for lunch. You made enough for lunch, Christian. Sometimes that's all you need. Honestly, sometimes that's all you need. Just enough
Bingo.
for lunch and dinner. I saved 15% of my car insurance by not investing in Clover and running into a tree.
There you go. Sometimes that's all. That's what you got to do, bro. Save money.
Absolutely, Peter. Yeah, sometimes Peter, you just need to shut everything down. Wash your hands, Peter.
Mm-hmm.
Make some fufu, Peter, and just and watch some Nigerian films, Peter. That's all you need to do sometimes. Listen to only Peter knows what I'm talking about, guys. Unless no dinner, Christian, just lunch. Christian,
Thank you guys for joining us today, though. We appreciate you hanging out while we do this Clov call.
You guys, Peter, what more do you want? Again, there's not a whole lot of movement here, guys. You guys remember AMC? AMC was the same here, right? Not a whole lot of movement after hours, and then pre-market we had a nice run. Okay, Patrick, you understand what I'm talking about, Patrick? Yeah, absolutely. Honestly, Peter, Patrick, sometimes that's all you can do, right? So, what else do you want? What else do you want, guys? So, yep. Oh man. Yeah, guys. No, nothing really happening here. Again, if you're watching some names, say that you would like us to take a look at briefly, I can take a look at that very quickly before we hop off, and then come back. Maybe tonight or most likely tomorrow, right? So yeah.
Oh yeah, there'll be a new list of runners in the morning, and we'll be watching them throughout the day, just like every other day.
Yep. Yeah.
The way we'll be watching Clove.
Yeah. I had you on the background for support. Are you streaming tonight? I didn't hear if you said. Beth, not sure. Beth, we'll see. We'll see, Beth. I'll let you know in Discord.
If those goes to 30, we'll stream tonight. Mm-hmm.
Oh, if it's dropping, guys. Again, if it's dropping, I'll come on. So right, so.
Or if it goes to 30.
There you go. Ducks are Beth. Virgo. Oh wow, it's actually having a very nice after hours here. Virgo, this is very nice. We need to look at again. It's expensive though, right, Virgo? So this one's as much as it's running here, not a whole lot of people. Yeah. So again, new IPO here seems like new IPO on Ducks there, and it's having a very nice day today. Nice after hours, and it's going, Virgo. It's going. Continuation. Think Opal. What am I looking? Oh, AMP. What's AMP sitting on for you now? What's AMP at? Mystery
I have
asking.
no idea.
Yeah, that's an AMP. Mystery. The mystery. 780.
I gotta go here in a second.
Oh no! Again, like it's just like if Doge is moving, guys, either up or down, most likely come on. But yeah, so it's just when we're sitting flat, guys, there's not a whole lot happening. It's just if we can rest and get ready for like long days, yeah, that's better, right? So I'm around 6 cents. Yeah, I'm still sitting at 6 cents, guys. Wow.
Yeah, 6 cents.
Yeah. Again, AMP is one that's been again a Reddit favorite there. It's good for what is it good for again? I can't remember what I was researching there. So is it transactions, guys? There's something very cool about AMP that I can't remember now. So mystery, too bad you're not in Discord or Slack, mystery, so I can send you some AMP details.
I know.
Yeah. So yeah. Yep.
NIO announces that they're going to deliver 3 new vehicles in 2022.
NIO. Oh yeah, NIO was today as well. Actually, NIO reported some earnings as well today. So NIO, a lot of earnings here today. All right, so yeah, NIO isn't doing a whole lot after hours here. It's volatile, just like everything else, right? So yeah, just like everything else. Crypto, yeah, AMP crypto, yeah. You know what? Let me take a very quick look here at AMP here for you.
We'll see you guys in Discord. I gotta get running. I gotta go pick up my son.
Okay, sounds good. What are we sitting at?
We love you. Y'all be good. See you, boys.
Yeah. See ya. Okay, bye. Bye. Again, like AMP is one that hasn't been around for that long, right? Alchemistry, again, like we know this thing has support around 6 cents here and resistance around 12, right? So expired. I needed much lunch money. Chemistry, okay. Okay, sounds good. Yeah, again, we know AMP has some support around 6, resistance around 10 and 12. So yeah, again, if you're buying AMP, a lot of these cryptos, you need to have a longer term outlook there, right? So you know what, guys? Not a whole lot happening here, so I'm gonna leave it. Mystery, no, that's okay. Mystery, that's okay. We're gonna leave it here, guys. Again, we'll see you guys maybe tonight. You're tired, sleepy. Get some rest, Beth. I'll see you guys tonight, or if not, then tomorrow, right? So again, have a wonderful evening, guys. And yeah, if not, bye, guys. Bye. Bye, Beth. Bye, Ray. Bye, Mystery. Bye, Virgo. Bye, Gary Doge. Bye, Virus. Bye, Will. Bye, guys. And Peter. Bye, guys. Bye. Christy. Bye, Christy. Not good about AMC 100 expiring 2022. You have a lot of time. So you might be okay then. For $100, yeah. Peace Crypto. Kenya. Bye. Crypto Crazy. Bye. Green. Bitron. Oh, I know. Green, right? So that chart is rubbish, but I just went off head. So thank you, guys. Bye. Yeah, that chart is rubbish. That AM chart is rubbish.